eXp Realty posts a $21 million loss this quarter. It joins, frankly, all brokerages basically that we've been covering on this YouTube channel here this quarter, for the quarter of 2023. At this point, I have not seen a brokerage turn a profit. So we just covered in the past video, we just covered Remax posting a huge loss as well. So much so that the leadership had to change or was changed in the process. So let's see what eXp has to say about these earnings, because I think it matters. I think it matters as a state, as a just a general state of the real estate industry, because you have a brokerage that has almost 90,000 agents. So Remax has about, I think, like 135,000. So that's a huge brokerage there. So we have another big brokerage posting earnings that we need to discuss. So eXp post. Oh, by the way, this article is courtesy of Inman.com. Check them out. eXp posts revenue uptick in Q4, so there's more income at the top, but not enough to turn a profit. So at the bottom, that's what ultimately matters. That's what ultimately keeps you in business as a business, right? So let's get into it. eXp World Holdings, which is the parent company, revealed that its revenue rose during the fourth quarter of last year, but a difficult market still took a toll on the firm, leading to a net loss and very slow growth in agent count. This is very similar to what Remax announced again in the previous video. In total, the company, which is the parent of brokerage eXp Realty, brought in $983 million in revenue between October and December, according to a newly published earnings report. That's up from $933 million during the fourth quarter of 2022. However, despite the uptick, this is the important part, the company lost $21 million, a significant jump from the $7 million loss 1 year earlier. So we're going to get into why that's the case in the founder, chairman, and CEO's own words. Glenn Sanford, eXp delivered solid revenue in the fourth quarter, which is true, despite continued weakness in the United States residential real estate market, which is also true, thanks to our global base of highly productive agents. Sanford said our agent-centric model and value proposition, scale, and superior efficiency enable us to invest in the success for our agents. So I'm assuming that his superior efficiency comment is based off of the model itself being an online model versus a brick and mortar model. That's what the big, I don't want to say big claim to fame, but that was the disruptive part of Mr. Sanford's proposition back in 2009 when they were founded. Market weakness, notwithstanding, though, total transactions in Q4 rose 6% year over year. So I highlighted that because we have to take into consideration that there's less transactions happening in 2022 and 2023 than we had in the previous years. And certainly in 2024, you're starting to see a little bit more of an uptick, but it's still trending towards a decline in overall transactions. Why is that the case? We have the higher interest rates. You have a lot of individuals that have a 3%, a 4% that are struggling, and I don't blame them, struggling to purchase another home or wanting to get into another loan that is 6%, 7%. So there's that. They're doing it if they have to. If they have to relocate, then of course there's not much that they can do. But getting into another home or purchasing another home, it's not done on a whim as much as it was in the past when the interest rates were 2%, were 3%. There, you were almost forced to do a transaction because of how cheap money was at that time. So you have the higher interest rates that are affecting that as well. Market uncertainty. You have a lot of inflation happening where a lot of people just honestly can't afford to purchase a home, and a few other market situations. So that's why you have less transactions altogether. The report also includes numbers for all of 2023. Over the entire year, eXp brought in $4.3 billion in revenue. That's an astounding number. A 7% drop compared to 2022. So you see in 2023 that it continued to drop, partly because the rate started increasing in 2022. So you have still I believe the first quarter, if I remember correctly, it was still relatively attainable. The lower interest rates were still reasonable per se back when you compare them against the previous months and years. That so you're still having in 2022. That's why you had a few more transactions overall, not just from an eXp perspective. Every brokerage had more transactions in 2022 versus 2023 because, again, the real estate market as a whole was just absolutely ripping. It was just crazy. The company also lost about $9 million back then, which is a reversal from the $15 million profit turned a year earlier. So again, every brokerage was turning a profit that was, had agents basically because there's just so many transactions. There was a lot of individuals that were purchasing. Now you see transactions dip 3% year over year in 2023. So this is actually less than the industry average not in my opinion. Like, that's actually less than it dipped less in for eXp than the general market. A lot of that has to do with the types of agents. So I have some information about eXp in terms of how they're growing, which will be covered here in this article, but I can shed a bit more light into it because I have personal knowledge about eXp as a whole. eXp last reported earnings in November. At that time, the company revealed that it brought in $1.2 billion in revenue between July and September. So Q3 is what this is referencing. That number represented a 2% year-over-year dip, but was still enough for the brokers to turn a profit of $1.3 million. There's actually something I mentioned in the Remax video that I posted earlier. eXp was the only brokerage let me rephrase that. eXp was one of the only two brokerages that was publicly traded that actually turned a profit. And I believe the other company was Real. If it wasn't Real, it's probably Fathom or United. No, you know what? It was United. One of those three. I should have looked before I pressed record. But basically, that quarter, Q3, eXp was the one that turned a profit, was the most sizable profit, the profit at that time. And I think it was United, if I remember correctly now, that turned a slight profit as well. So those were the only two brokerages out of all the brokerages out there that were publicly traded that actually turned a profit. So Remax wasn't able to do it. Century 21 wasn't able to do it, and Compass wasn't able to do it. So you have all the other brokerages that weren't able to accomplish an actual net profit. So here, eXp couldn't outpace the market at this point. And I mean, who can? I have not seen in this Q4 reporting period, I haven't seen a brokerage outpace the market in terms of actually having profit, actually have a return. In addition to revenue and profits, Thursday's report also reveals that eXp finished the year with 87,515 agents. That's a 2% year-over-year increase, which is notable given that the overall number of realtors in the United States officially went into decline earlier in 2023. So you see the attrition of agents is a real thing. Now, when you compare the agent count to last video where we cover Remax had a 6% decline nationally, so in the United States, and I believe like a 7% increase or 8% increase internationally. So they actually turned they had a year-over-year increase as well, but a lot of that growth had to do with the international expansion. And I suspect that eXp, the same thing happened. That's what I suspect, but it doesn't break it down in the break it down in that fashion where it has the international and the national. However, the company's year-end agent count was also down 1.8% compared to the previous quarter. So when you compare just quarters to quarters, it is down. During the investor call, Sanford said that Q4 was the first time in history our agent count has declined quarter over quarter, which is crazy. Which is crazy to think. You've always seen eXp, because of their model and how they operate, increase agents. Though he added that the agent attrition is most likely happening among the least productive agents who do only 1 or 2 deals per year. And that's true. So if you know eXp has a commission split model like many of the bigger brokerages out there do as well. which means that there's a certain percentage that goes to the brokers, there's a certain percentage that goes to the agent. Well, the agents that do 1 to 2 transactions per year, either because they're part-time or they're just getting into the industry, or they just have their license because it's a hobby, if you will, they're not going to necessarily be in a brokerage that will do a commission split. They're more on a transaction-based shop where they'll get charged per transaction as opposed to a split. And they're going to look for the least amount of fees out there, brokers that will charge them the least amount of fees, because they have 1 to 2 transactions per year. So it doesn't make sense for them to spend thousands of dollars per transaction by doing this, by joining a brokerage like Compass, like Remax, like eXp, like Century 21, like Coldwell Banker, like Keller Williams. It doesn't make sense to join those brokerages, because in reality, 1 to 2 transactions are better done in a transaction shop than a commission split. Now, I am in a commission split model, and full disclosure, I am actually part of eXp Realty. So with those agents that I have conversations with that are comfortable staying at 1 to 2 transactions because they're hobbyist agents, I actually just flat out say eXp is probably not the route for you. Because again, I recognize that if you're gonna do 1 to 2 transactions and that's your only history, that's your only desire, you're better off doing that in a transaction shop and pay $300, $400 per that transaction than spend thousands of dollars on a commission split that you're not going to necessarily get back if your desire is not to grow. Just so there's a lot of merit to that. The market turn of 2022 and 23, which is driven, we're right here. The market turn of 2022 and 2023, which was driven by higher mortgage rates and low inventory, there it is, higher mortgage rates and low inventory, has so far thwarted, some words just get me, thwarted, that ambition which Sanford acknowledged last year in Intimate Connect, New York, and more broadly, it has shifted the conversation about big real estate companies away from the headcount numbers toward the competition of top talent that it can close deals in tougher markets. So this is something that I want to talk about. So let me circle back to that after this one. So Sanford's comments during Thursday's investors call highlighted that shift. He celebrated the company's recruiting and retaining highly profitable agents as well as teams. And he noted that eXp grew its market share from 3.9% to 4.2% in 2023. So as far as capturing the market share, that's huge. That's a huge thing that a lot of brokerages are actually gravitating towards. So right now, it's absolutely true that you have a lot of brokerages out there competing for those top teams, competing for those high volume agents, competing for that top talent that's actually bringing in a ton of business. How are they doing that? Well, they are heavily incentivizing those agents to come and do the transactions in their brokerage. That's something that's happening every single day. So I know personally that eXp has rolled out some models that will make it financially beneficial for top teams to come over through some incentives. What are incentives? Well, it means money. Giving agents a very favorable a favorable incentive for them to come over in the form of straight up cash, in the form of reduced fees, in the form of concessions, in the form of a few other things, right? So it's made it as frictionless as possible to attract those agents at this point. And it's not just eXp. You have Compass, you have Coldwell Banker, you have Rio, you have Remax, you have all of the brokerages out there that are looking for these high volume players, because again, right now in this tough industry, you need transactions to go through the door. You need transactions to maintain the overhead that all of the brokerages have. It doesn't matter if we're talking about eXp, Rio, or Epic, or any other virtual model. There is staff that you have to pay. So you need transactions in order to have that. We mentioned this in the previous video where all of the revenue is coming from the agents. So if you have all of these agents that are not doing any business, then you really don't have a brokerage. You have a failing business. So that's why you have to have as many agents that are highly profitable. Well, let me rephrase that. As many agents that are actually doing transactions that will keep the lights on or the digital doors open in eXp Realty's model. So I think overall, eXp, out of everybody right now that we've been seeing and been covering the results for Q4, has posted one of the least, even though it's still a profit loss, a net loss. It still has the most profit in the at least the Q4 that we have seen. We've seen some other brokerages have some incredibly negative growth, incredible negative net profit, negative net profit. So essentially a loss. But overall, I think it's gonna be interesting to see what happens this next quarter. So Q1 of 2024, because right now you have a lot of you starting to see some an uptick in transactions. You're starting to see a uptick in just activity. So we'll see. We'll see what happens. We'll keep you updated if anything comes up. Let me know in the comments section what we need to be covering next, and I'll talk to you soon.